Welcome back to the channel. If you've been watching the precious metals space over the past year or two, you already know that something big is happening with silver. But today, we're going to break down exactly what's going on in the silver market right now, why prices have been surging to levels not seen in decades, and what it could mean for the months and years ahead. So, sit back because this is a story you don't want to miss. Let's start with the price action because it's nothing short of extraordinary. Silver hit a record high of $54.48 on October 17, 2025, and has largely held above $47, which analysts see as a sign of the underlying strength in the market. To put that in perspective, silver hadn't reached those levels since its historic run in 1980. By early November 2025, silver had posted a 67% year-to-date gain, eclipsing even gold's impressive 52% rise and leaving the S&P 500's 40% increase far behind. That's not a typo. Silver outperformed stocks and gold in 2025, and the reasons behind that go much deeper than simple speculation. Now let's talk about the single biggest driver of this market, and that's supply and demand. For the seventh consecutive year in 2025, the global silver market is expected to remain in deficit, meaning demand is outpacing supply and putting sustained upward pressure on prices. Think about what that means. 7 years in a row, this isn't a blip or a short-term anomaly. This is a structural imbalance baked into the foundation of the silver market. The combined deficit from 2021 through 2024 alone reached 678 million ounces, the equivalent of roughly 10 months of global mine supply. The world has essentially been drawing down silver reserves year after year, and the pipeline to replace that supply simply isn't there. So why can't miners just ramp up production? It sounds simple, but the reality is far more complex. Roughly 70% of silver is produced as a byproduct of mining other metals like copper, lead, and zinc. That means even when silver prices rise, miners can't simply switch on new silver production. You don't dig a silver mine overnight, or grades, which measure the silver content in mined rock, have decreased by around 22% since the mid-2010s. Meanwhile, the industry is also facing rising costs, labor disputes, and stricter environmental regulations across key producing nations. In 2025, global mined silver supply is expected to remain flat year over year at around 813 million ounces, with higher production in Mexico and Russia being offset by lower output in Peru and Indonesia. So even in an optimistic scenario, supply growth is marginal at best. Now, let's look at the demand side because this is where the story gets really interesting. Silver is not your grandfather's precious metal anymore. Yes, it still plays a safe haven role similar to gold, but today, silver is at the heart of the global energy transition. Industrial demand now accounts for 59% of total silver usage, driven by solar panels, electric vehicles, and consumer electronics. Solar panel usage alone rose more than 25% in 2024, and newer solar technologies are requiring even more silver per panel. Photovoltaic demand reached 197.6 million ounces in 2024 and continues to grow as countries expand their renewable energy capacity. Electric vehicles are also a massive contributor. EVs use significantly more silver than traditional gas-powered cars due to their electrical systems and charging infrastructure. And then there's artificial intelligence. The development of AI systems is continuing to boost demand for consumer electronics, adding yet another layer to silver's industrial demand profile. What makes silver particularly fascinating right now is its dual identity. On one side, it's an industrial metal, powering the technology of the future. On the other, it's a monetary metal and a store of value with thousands of years of history behind it. When economic uncertainty rises, investors flock to silver just as they do to gold. And 2025 has had no shortage of uncertainty, from trade policy shifts to geopolitical tensions to concerns about the global economy. Elevated macroeconomic and geopolitical risks, including U.S. trade policy, have prompted investors to lift their allocations to precious metals for portfolio diversification, and that investment demand has strengthened noticeably, comfortably offsetting weakness across other key areas of silver demand. Here's another angle that doesn't get enough attention: the gold-to-silver ratio. This ratio tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, that ratio has averaged around 67. With the ratio recently sitting around 91, silver is selling at a meaningful discount relative to gold. Many analysts view this as a signal that silver is undervalued and has significant room to catch up. When institutional and retail investors start paying attention to that gap, money tends to flow into silver, and that's exactly what we've been seeing. In the first half of 2025 alone, global silver-backed ETPs saw significant net inflows reaching 95 million ounces. There's also talk in the investment community about a potential silver squeeze. The available inventory of freely traded silver has been heavily diminished, making the metal more sensitive to incremental buying. Small increases in demand could now lead to disproportionately large price increases. When you combine tight physical supply with growing industrial consumption and rising investor interest, the conditions for sharp price moves are very much in place. It doesn't take a massive surge in buying to move a market when the inventory of freely available metal is this thin. As of early 2026, silver has staged another powerful rally, with futures prices surging above $85 driven by export restrictions from China, rising demand from green technologies, and renewed interest in silver as a safe haven asset. That's the current landscape as we enter 2026. And the fundamentals haven't changed. If anything, they've intensified. Looking ahead, forecasters remain broadly bullish on silver's trajectory. The supply deficit is expected to persist. Industrial demand tied to the clean energy revolution isn't going away. Mine supply growth remains constrained, and on the monetary side, central banks, particularly in Asia and the Middle East, continue to diversify away from the dollar, a trend that historically supports precious metals prices. Silver's move from under $30 in January 2025 to well above $60 by December speaks to the tightness in the market, and analysts expect that fundamental tightness to continue running through the silver story into 2026. The bottom line here is that silver is no longer just a hedge sitting in a vault somewhere. It's a critical industrial commodity, it's a monetary asset, and it's at the center of the biggest global energy transformation in human history. The supply just isn't keeping up with what the world needs, and as long as that structural gap persists, and right now, there's no clear sign it will close anytime soon, silver's market story remains one of the most compelling in the entire commodity space. Whether you're an investor, a tech sector watcher, or simply someone trying to understand where the global economy is heading, the silver market deserves your attention right now more than ever. That's it for today's breakdown. If you found this valuable, make sure you hit that subscribe button, drop a comment with your thoughts on silver below, and share this with anyone who you think needs to hear this story. We'll see you in the next one.